What's up, guys? Welcome to another video, another exciting video. Today, let's talk about the difference between a conventional loan and an FHA loan. I get this question a lot. Which one should I choose? And again, it comes down to you. But I like to give my clients both options, especially if they qualify for a conventional loan and FHA. Show them both options. My job is to educate. Your job is to make the decision what's best for you and your family, what makes sense financially. We're gonna go through a few things here. We'll look at the down payment, we're gonna look at credit scores, we're gonna look at appraisals, we're gonna look at mortgage insurance, none of that in that order, but let's jump into it. So for down payment, okay, down payment, conventional loans have options, lots of options. FHA does too, actually. I shouldn't say conventional has options, but conventional loans, you hear a lot, 5% down, 10% down, 20% down. At 20% down, you get rid of the mortgage insurance, which we'll jump into in a second. But conventional also has a program that not a lot of people know about, and it's a 3% first-time homebuyer program. So that's an option to get somebody into a home with as little as 3%. Why is that cooler than FHA? Because FHA's is 3.5%. There's a small little difference right there. 0.5% really isn't a lot, but keep in mind that those are your options. This is conventional's way for competing for those first-time homebuyer programs. Before it was always FHA. Hey, we're going to take all these because we got these young buyers, don't have a lot of savings, and we get them. And conventional's like, that's not cool, so we'll do a 3% down program too. And that's where they came out with that program to compete, and it has been awesome. I have clients that use it all the time. I have clients that use the FHA program all the time. Both are great. So let's jump into the next one. The next one is going to be mortgage insurance because this is part of that down payment. With a conventional loan, if you put 20% down, you're not going to have mortgage insurance. With FHA, if you put 20% down, you'll still have mortgage insurance, okay? So that's where you want to look at, okay, what is the big picture? How long are we going to be in this house? What's my long-term goals? Are we going to refinance? Where are rates now? Are they going to come down so I can refinance? You want to look at all those things. FHA loans are going to have mortgage insurance. Depending on how much money you put down on FHA, mortgage insurance could eventually fall off as well. But for the most part, your typical 3.5% down, that mortgage insurance is going to be on the loan for the life of the loan. Okay. At the very beginning, you're going to have something called upfront mortgage insurance, which is mortgage insurance that gets tacked into the loan. It's an extra. It basically turns your loan from, let's say your loan is $200,000 to like $205,000. That's just rough numbers. It's not quite that, but gets you an idea. It raises your loan amount, and right away, people look at it, especially if they qualify for both conventional and FHA. Do I want to lose that equity? That's a lot of equity. Or do I just want to go conventional? So with conventional, how do we get rid of mortgage insurance from the very beginning? And that's by putting 20% down, okay? If you put 20% down on the conventional loan, you will not have mortgage insurance. If you put 19% down, you will have mortgage insurance. And I know some of you are going to be like, Jared, I put 10% down. I don't have mortgage insurance. That's true. There's ways around that as well, through something like lenders can offer. It's called lender paid mortgage insurance, where the lender covers the mortgage insurance for you by offering you a slightly higher interest rate than what you would have normally had. So there's ways to not have mortgage insurance without putting the full 20% down too. And pricing on that varies. It really varies. So always ask your mortgage professional, because there's times that, hey, pricing's great to do the lender paid mortgage insurance, and sometimes it's not great pricing. So you just want to look and ask, and always ask, because it could be 1 year it's good, 1 year it's not. We just don't know. We got to price it and we got to see. Now credit. Okay, credit. So where does credit fall into all of this? We got to look at your credit scores. So typically conventional likes good to great credit. They don't typically like low credit. You can have a lower credit score with conventional, but just keep in mind, they're going to raise the interest rate and they're going to raise your mortgage insurance. So everything kind of goes up in the price. When that happens, if we have a lower credit score, sometimes we want to price out an FHA loan because they're a lot more forgiving for lower credit scores. A lot more willing to just, okay, you still are 3.5% down. Your rate is still about the same as it was, and the mortgage insurance isn't going to be crazy. So again, lower credit, sometimes FHA is a cheaper route. Which brings me to interest rates, okay? Interest rates are going to change depending. If you go online and you look up interest rates, You could type in the average daily interest rates or the average interest rate today on Google and it'll give you a number. That doesn't take into consideration different factors that determine the rate that the borrower gets. Okay, how much they're putting down, what's their credit score, is it a primary residence, is it an investment property? Those things then change that interest rate to what they end up with. Typically, interest rates are lower with FHA than conventional. There was a time I worked for a lending company. So in the lending world, you've got mortgage brokers, you've got mortgage lenders, you've got credit unions and banks. Okay, those are the ones who lend you money. Mortgage brokers typically have the lowest fees and they're small shops like mine. And FHA rates are usually significantly cheaper than conventional rates. Mortgage lenders, I worked for a mortgage lender shop for about 6 months in my career, and I found out that their rates between conventional and FHA were very close. There was not a big gap like I see in the mortgage broker world. So keep that in mind that those can vary, but usually FHA is going to have a lower interest rate than a conventional. Debt to income ratio. Now we're talking, okay? So FHA is going to have a higher debt to income ratio, meaning if you have a lot of credit cards, car payments, student loans, FHA will be more forgiving, allowing more debt to be shown versus conventional. So that's another thing to keep in mind is FHA does allow a little more debt than a conventional loan. Another thing let's talk about is the appraisals, okay? FHA appraisers that go out have a special certification or stamp or badge they wear on their shirt that says FHA approved appraiser. Now, I don't know what they have, but they definitely have to do more education. They have to understand FHA a little bit better when they're appraising. So the lender doesn't get to just go walk through the house when they're lending this money, but when they send the appraiser out, the appraiser is kind of their eyes, right? And they're out there to see, okay, is this house safe? Because that's what FHA cares about. Is the house safe? Are there electrical wires hanging out because someone took the ceiling fan down and didn't put a cover over it or put those little wing nut things on there? Is there peeling paint? Peeling paint is huge, especially in Arizona outside. Any exposed wood, peeling paint, that needs to get fixed. FHA cares about that stuff. Carpet, let's say the carpet's all worn and it's a tripping hazard because how worn it is, FHA cares about that. They're gonna want that stuff fixed before they lend on it. So those are some things that an FHA appraiser will call out and ask to be fixed. Conventional, a lot more chill. You can have the carpet pulled up and just have the concrete there in the master bedroom. That's okay. As long as if there's tack strips, they still want those pulled up, but conventional's cool with that. It's cool with the peeling paint. So conventional can be more laid back on the appraisals. That is a win for the conventional side when it comes to appraisals. But that also makes you as a buyer feel a little more safe on FHA because again, you got another person out there besides your home inspector that went out there and looked. Now you have the appraiser going out there to make sure the home is safe for you and your family. So in a nutshell, conventionals make a little more sense if you have a higher credit score, good to great credit score. Maybe you're going to put 20% down. Conventional is probably better. You're planning on staying in the house for a long time. Conventional could be better. Even if you're not planning on staying in the house for a long time, FHA could be better because you can always refinance into a conventional loan later down the road. FHA is good if you might have some things that are on your credit that are a little bit funny, maybe some bankruptcies, foreclosures. They have a shorter turnaround time before you can buy a home versus conventional loans. Also, again, a higher debt to income ratio. So if you have a little more debt, sometimes FHA is better. What I recommend, look at both. Look at conventional, look at FHA. You're going to see the difference between the payments. You're going to see the difference between how much you're actually financing. And that's going to help you make a decision on what's best for you and your family. If you have any more questions, reach out to me. There's a ton of different, scenarios, options, and I'm happy to run them for you. We'll talk later.
Check, we broadcasting. Ain't nobody ask, we splashing. Beats that had boom, now we moving massive. Breaking you down in the bed.